This is Steve Wolff, and we're here with our monthly market recap for October 2021. In October, actually, this is a pretty good month for the stock market. Most of the indices were up anywhere from about 6 to about 7.5%, which basically made up for what happened in September, where we were down quite a bit. So September was bad, October is good. This is pretty traditional. It seems like most every year, September is the worst month, and then October, November, December seem to be better months. Of course, I hate to get too worked up about month-to-month statistics because, they really don't mean that much from month to month. I like to look over a much longer time frame, but that's what this report is about, so we'll talk about month to month. Basically, earnings are continuing to come in, and the earnings that have come in so far have been really good. This seems to be a pattern we've had for quite a number of months. I don't see that necessarily stopping just yet, although the market is starting to get a little bit frothy. We've been saying that for a while. Things are slowing down a little bit. As a matter of fact, one of the interesting things that happened was some of the big tech names like Apple and Facebook and Google and Amazon, they came in at a little bit lighter, except for Google. They came in at a little bit lighter than people expected. So maybe the earnings are starting to finally slow down on the big stocks. Maybe this is a turning point. We'll know in time. Generally speaking, small stocks outperform large during the last couple of months of the year. We'll see if that happens this time. But it wouldn't surprise me if that happens, if for no other reason, is that the large stocks have grown tremendously, especially versus the small stocks. So in a CNBC report that I read here just a day or two ago, October's Institute of Supply Management, that's the ISM, manufacturing index, fell to 60.8 from September 61.1. Now, that's okay. I mean, anything over 50 means that we've expanded, but economists were expecting a little bit better. So it means that things are slowing down a little bit. Maybe combine that with what's happening with some of the large companies, and finally we may be seeing a little bit of slowdown. Doesn't mean we're not expanding. The bull market's still there, I think. I don't see any reason not to continue thinking that the stock market's going to be okay. And we'll have our lapses, the 5%, 10% corrections. But so far, I still think that the stocks are doing well. Another big event that's coming up here, I believe it's on this Friday coming up, is that we're going to be talking about the employment report. And we're going to see if there's an improvement in hiring. That's been a big issue. Lots of job applications that people can get jobs, but nobody wants to do it. There's a lot of saying, hey, we're hiring, and no one's coming in. Part of the reason we think is because of the COVID variant, which came on again toward the last couple of months, and now it's waning. So that's a good thing. And the other thing is that a lot of these government programs that have been supporting people who aren't working at quite a high level are finally coming to an end. I read something that Jim Paulson, the chief investment strategist of the Leuhold Group, said, and he said he thinks the key to the employment report is how much wage inflation rises and whether the labor force participation rate finally picks up. So when you're talking about the wage inflation rising, all inflation seems to be rising. That's part of it. Rising wages certainly are a part of it. I mean, we talk about no matter where you go, companies are paying more to have people work for them. Okay, well, what they do is they eventually put those prices into their prices when they go to sell their goods or services. The other big issue still is the supply chain issue. We still have a lot of container ships that are sitting out at sea. We can't get them all unloaded. I know President Biden has said they want them to work 24/7, and that's a good thing. The problem really is that there's just not enough trucks to unload those things. So for those of you, and I might have said this in the last report, but for those of you who are buying Christmas gifts and Hanukkah gifts and all the other holiday gifts, you might want to start doing that right away, because it's possible that the shelves might be a little bare if they can't get those containers unloaded. Matter of fact, I think this year could be an interesting year for gift cards. So if you can't get the actual physical product, you might be giving people gift cards. So we'll see how this plays out in November. And just to let you know, too, that anything that we talked about as far as individual stocks are concerned, individual securities, is not meant to be something that you should just follow. Okay, this whole report is just meant to be informational. All right. If you have any questions, talk to your financial consultant, talk to your accountant, talk to whoever, but don't just take it from here and go buy something. All right. Well, we'll see how things go in November. And that's a wrap for this month of October. And we'll see you again in about a month. Thanks for listening.